Before we get started, obviously, just want to say that I'm not a financial advisor. You're not a financial advisor. This is not financial advice. So, I mean, what do you do? Like, what are the basics that you learned at first that really helped you kind of get a good feel for everything that you do with day trading?
Day trading is a lot different than investing. So you've
Right.
got, two kind of worlds of the market. One of them is investing, one of them's trading. Investing is about long-term fundamental value of a company. Technical analysis matters a little bit. Like it's useful to find the best entry point and the best exit point, but that's like 10% of the puzzle. The rest is, fundamental. So it's the balance sheets. What is their competition in the market? How are they going to compare, a year down the road, 2 years down the road, 5 years down the road? What kind of time span are you looking at? That sort of thing. Trading is the exact opposite. The fundamental value of the company doesn't matter a lick, not even a little bit. It's all about reading psychology of charts and taking advantage of momentum and sentiment. So if you can learn what the candlesticks are telling you, essentially they tell you, the charts tell you what people are thinking and how they feel about the stock in that current moment. If you can learn the psychology and the motions of traders, because that's what 90% of it is just people that are like, this is going up, so I'm going to buy in right now.
Yeah.
FOMO hits, and then on the way down, it's all FUD, which is fear, uncertainty, doubt. It's like, oh crap, going down, better sell. It's taking advantage of those candles and learning how to get in, get out at the right time. Something that Jordan Belfort said, and I think this is something that would if I had known this when I started trading, I probably wouldn't have lost as much. You want to catch the end of the beginning and the beginning of the end. And what that means is don't try to time the absolute bottom on an entry. Don't try to time the absolute top. So when you feel good that it's begun a new upward trend, when you find that exact moment, it's like, okay, there's no doubt in my mind right now that this is now going up, right? You buy it at that point. You don't want to guess, because if you guess, you might be wrong. You might lose money, right? And then on the flip side, don't try and time that top, because only a handful of people get to hit that top. So it's just about finding those small margins and then rinsing and repeating. So
So just
that's
just
that's the
quick
way I did it.
plays,
And
not
the
getting
other thing that I
greedy
would
when you're
say
up.
is you have to lose money to learn to make it.
Right.
Yeah, exactly, man. That's it. At least for day trading,
Okay.
for sure. And it's really hard to rein in emotions, because you could have like the basic understanding. You could know how to read charts like to a T, but that doesn't take into consideration, because I'm sure you know how it is, the emotional side of things. When you're looking at the chart and you're up like freaking
Oh yeah.
2,000, 5,000, $10,000, whatever it is, and you're like, oh, let's see how much more I can make, baby. Like it's hard to wrap that in. You know what I mean? So
Like I've seen a lot of people talk about is like certain kinds of patterns. There's a bunch of different patterns that day traders look for. For instance, I've heard a lot about like the cup and the handle or whatever. What are some patterns that you look for, and how do you
yeah,
recognize them?
right. Good question, man. I use a really, really simple trading strategy, and there's people out there that have 6,000 indicators on their charts. But to be real with you, man, I can't freaking read them. I can read them, but it just clutters things. So I keep it simple. I look at the charts and I look for exactly like you're saying, man, just setups. That's it. I look for breaks over levels of resistance. So essentially, a resistance line is a price point that has, it touches at least 3 times on a candle, and it's hard to break for whatever reason or another. The market does not want to push over that level of resistance. So when you get that push, you can ride momentum and bring it up from there. So that's one way that you can play it. There's different ways that there's resistance lines. You can have them, horizontal, just flatlined, or they can be descending. So if it's, you just have this downward channel of price action and it finally breaks out of that, you can play that break out of the downward channel to sell off, and then play it as like a bounce play. So that's one in particular. There's like, I don't know how many exactly, quite a few different candle patterns and chart patterns, but that's the main one that I play. The second one being bullish flag or wedge setups. So if you have a descending level of resistance, meaning there's this trend line of descending price action, which a stock can't break over on a chart, you have that, and you have an ascending level of support, which is what's holding up the stock. So you've got this ascending line, which is for whatever reason or another not able to break underneath, and it kind of winds down in price action and forms either a flag or a wedge. And you get a break over that descending level of resistance, you can play that as well. So I'm really, really particular about the trades that I take. If you just pick them willy-nilly, you're gambling. You're taking guesses, and that's over the long term, you're not going to make money like that. So you got to be really particular. And I just look for exact setups, and if they're not there, I don't take the trade.